After years of clawing its way back to health, UBS is finally turning a corner. The Swiss bank beat analysts' expectations with a 7% rise in first quarter net profit to $1.2 billion. In contrast to UBS, first quarter results at Barclays didn't impress. Profits at the British bank fell 5% in the first quarter from a year ago thanks to a dent in fixed income revenues. ETX Capital's Joe Rundle says Barclays has to change tack.
It's trying to stick with investment banking and is really suffering. It can't pay for talent, and an exodus of talent's hurting it, and I expect that decline to happen, and probably at some point Anthony Jenkins might have to bite the bullet and say, look, we're going to get rid of the investment bank, but that's a big step for Barclays.
UBS's shift away from investment banking is what's boosting confidence. Restructuring plans that sees the bank dividing up into different holdings that eases capital requirement pressures is also helping UBS's profile. Reuters Breaking Views' Robert Cole.
UBS, you'll recall, has reinvented itself, or certainly done a major restructuring a couple of years ago, realising that investment banking wasn't all that it was cracked up to be, and has moved forward, putting much more emphasis on wealth management. Barclays, shares down, and the kind of real sort of takeaway from this is that, oh, I wish they'd been doing a bit more like a bit more of what UBS had been doing.
Banks around the world have been trying to get themselves in order following the financial crisis of 2008, and a financial transaction tax could be the next big challenge. It doesn't have global support, but Germany and France have led the campaign for a trading levy. Known as the Robin Hood tax, these protesters hope that some of the money raised will go to fighting poverty. With the European elections just around the corner, it could very well help to win over these voters at least.